Hi everyone, this is Michael Kramer of Mach Capital. Today is Tuesday, September 2nd, and it's around 6:30 p.m. New York time. So the rest of this week, we're going to be getting lots of economic data, and Wednesday, September 3rd, we'll be getting the JOLTS data for the month of July. We're looking for 7.37 million, down from 7.43 million. We're looking for 7.37 million, down from 7.4 million. Then on Thursday, September 4th, we'll be looking for ADP to come in at 65,000 for the month of August, down from 104,000. We'll also be looking for jobless claims to basically remain unchanged and for continuing claims to tick up just a little bit. Then we'll be getting unit labor cost revisions and productivity revisions. Also on the 4th, we'll be getting ISM services. We're looking for it to increase from 51 from 50.1. Then, of course, on Friday, September 5th, we're going to be getting non-farm payrolls, looking for just 75,000 jobs who've been created in August, up from 73,000. Unemployment rates expected to tick higher to 4.3% from 4.2%. Wages are expected to remain unchanged at 0.3%, while year over year increasing by 3.7% versus previous 3.9%. So a lot of this data is going to have a very big impact on where basically the entire market moves, because depending on how the data comes in, it's largely going to set up whether or not the Fed is going to cut rates in September. The expectations are, for right now, the odds favor about an 85% chance of a rate cut. So this is going to obviously have a big impact on things like the euro. The euro has been getting really kind of stuck at this 117 area. I was looking at the chart, and you can start to make an argument that maybe there's something going on here that's going to suggest the euro begin to decline. And what I mean by that, it looks like you're starting to get the makings of what could be a head and shoulder. And for that really to play out, you would need to see the euro drop below 116. If that were to happen, I think you could be looking at a euro going back to 114.7, maybe even 114. Just because, again, when we look at this pattern, it just seems to have a setup that resembles that of a head and shoulders pattern. You can clearly see the shoulders, the head, and then the neckline would be somewhere down in this area here around 116. And that would really be a nice setup potentially for a decline back all the way back to this 114 area. When we look at the pound's been weakening in a big way the last couple of days. There's lots of concerns growing there about the fiscal budget. We've been seeing rates rising pretty dramatically in the UK. And so when you see a big down move in the currency and along with rising rates, it's really more of a negative bearish signal. And that would be suggestive of a market that's really kind of worried about the economic outlook and stability. And right now, we're looking at, a pound that's fallen below 134, and this 134 area has served as support, at least support and resistance now a couple of times, and you can see it was in this area, here, and here. So now that we're back below it, it kind of gives you the sense that maybe the pound's going to be heading lower. If we don't bounce really quickly, meaning in the next day or two, then I would begin to think that we're going to be heading lower at this point. You can see that right now we're sitting on the Bollinger Band, which is offering a little bit of support, but within a couple of days, I'm sure this band is going to start to expand or turn lower. Additionally, you can see we're below the 10-day exponential moving average. So things are starting to turn more negatively for the pound, even though rates are rising. And again, that's because of what's really kind of going on there from a budget standpoint. I had thought that the yen was going to be moving lower, and to this point, that hasn't played out. We've just been continuing to really remain within this trading range that we've been in between, call it 148 and 146. We were getting close to breaking down last week, and then we snapped back, and then today we saw a really big move in the yen, and it rose back to resistance at 148. Unfortunately, the RSI is really not giving us a lot of indication. So at this point, we're really just not seeing any clear indications on the yen. I think if obviously we break out above 148.5, we could be looking at a move back towards 151. If you get a breakdown below 146, Then we're talking about moving back down to the low 140. So we're still waiting to really see how this plays out. Gold finally broke out and moved above 3430 area, which has been the major level of resistance that we've tested multiple times. Barely happened on the 29th, and then of course today on the 2nd we saw a really big move up. The only problem is that gold got very overbought very quickly, and that's sort of a red flag, at least for me. You can see the RSI is up over 73, and this is usually an indication that we're overextended and we're going to see some kind of pullback. Maybe we come back down quickly and refill this gap down here at 34.20, come back and retest it. If we do come back and retest it and for some reason we fail, I can't imagine that being a positive setup and a positive indication for gold. And otherwise, we would probably expect to see maybe this consolidate sideways for a while and work off the overbought conditions that way. So right now, gold moved up a little bit too quickly and finds itself overbought. At least you can see in the past, just getting above the upper Bollinger Band itself has brought gold back down. In this case, also got overbought, and we came right back in. So something to be aware of. We'll take a look at oil because I think oil is an interesting setup here. We're seeing that it's slowly trending higher at a very nice and controlled pace. We got above the previous highs in here around 67 on Brent. And now we're starting to trade a little bit higher. You can see we're a little bit above the upper Bollinger Band, but notice that the RSI is just barely at is only at 57, so there's still plenty of room to go here. I think if we can get above 70, there's a good chance that we could see a pretty big move in oil, potentially at least back towards this 76 area. But for right now, you can see it's very close to potentially breaking out of this trading range and potentially moving back up to 70. And that's really the big challenge. So if we can see Brent get through this 68, 69 region, I think the next stop would be about 70, 71. And then we're talking about some really nice momentum, probably up towards this broader downtrend that's been in place really all the way since August of 22, which could take us back to at least 76 or 77 over the near term. And the other key thing here is that the RSI has been clearly trending higher now, and we also have a trend higher in the price. So those are two positive developments. And again, I think $70 a barrel is what's really standing in the way of a bigger move. The DAX had a pretty big down day today. This has been obviously the really big level for the DAX, and the reason why that is at 23,400 is because those were the prior two highs before we went into the April sell-off. At least when you look at it from a Bollinger Band perspective, again, we're a little bit oversold, although you can see that we still have room to go on the RSI just at 37. But the last couple of times we saw it dip below the lower band, we bounced back up and moved back to the upper band. I don't know if this time is going to be different. We just have to kind of be aware of where we are on the chart, because below 23.4, we're talking about moving back into this 2300, 23,000, and then we're talking about starting to fill gaps in the mid 22,000, and then really all the way at the lower 21,000. So it's not really a clear-cut case that we're going to just suddenly see the DAX revert. We've seen this now 3 different times, and really if you wanted to make a case, just like you could begin to make a case like the pound, I already have kind of drawn out what could be a triple top or a head and shoulders, depending on how you want to look at it. And in that case, this would be the neckline. So a break below the neckline would be a really bearish indication. And that could really be what I think we're setting up here for, which would be a deeper and steeper pullback. Well, the FTSE is finally starting to give back after making that really big breakout and big run. You can see we're now below 9,150, and I think that's important because that means the next level of support comes around 9,054. The RSI still has plenty of room to go down, so we're not even close to being oversold. I think it's probably at this point more likely that we continue to see the FTSE move down, especially with rates in the UK moving up the way they are and the way the pound is weakening. So again, this would be more suggestive of a move lower. Obviously, if we were to move higher, resistance would be at 9,325. That's where your upper band is, and that's where the old high was. But again, generally speaking, looking at this, it kind of has a setup that looks like it probably goes lower from here, not higher. When we look at the NASDAQ, it really made a push lower today, dropping by about 80 basis points. We're now below where we were actually on August 22nd. So this is important because it looks like at this point, we've clearly broken whatever uptrend there had been in the NASDAQ, which really goes back to early May. And this was a pretty clean break, meaning we gapped lower today and we hit the lower band, and then we bounced off of it a little bit. You can also see that the RSI is sitting around 47. We're also below the 10-day exponential and the 20-day simple moving averages. And we really haven't been below these levels very often for more than a couple of days. In fact, here was 3 days, here was 1 day, here was about 1 day as well. And so this is an interesting spot. We've been below it now 2 days. I would say if we're below it for more than 2 days, meaning we're below it again tomorrow, and then we're below it again on Thursday, we probably could start making some sort of argument that there's a change in trend which has formed. I could also begin to make an argument that we are seeing, lower highs now developing as well. This was certainly a lower high than this one. In fact, the NASDAQ was the only index that didn't make a new all-time high. So we also have a downtrend forming in the RSI as well. So plenty of indications to suggest the NASDAQ is at some sort of inflection point here, potentially beginning to turn over from where it had previously been. And if you want to also make an argument, you can say that maybe there is some sort of head and shoulders pattern forming in the NASDAQ as well. Although the neckline isn't quite as clear, I would probably put it somewhere around 22,700 or so. That would be the level that if broken, I think signals much further to go to the downside. The S&P doesn't really convey exactly the same message. You can see on the S&P, we closed below the 10-day, we closed below the 20-day, we gapped below the uptrend that had been in place basically since early May. And again, you can see the RSI also moving down. We have come back down below the previous high. We gave back most of the gains we saw following Jackson Hole. It looks like maybe we broke down out of a rising wedge pattern. So again, overall, we have what's set up potentially could be some sort of turning point. But again, we haven't really seen anything conclusive. I would continue to think that, again, if we can see the index stay below the 20-day moving average for a couple of days, then that kind of tells us something different. But we haven't really been able to do that for very long. And so we have to be mindful that any sort of change in trend could be very, any sort of move down could be very short-lived until we get some sort of confirmation and some greater clarity that something is really changing in the market at this point. And finally, when you look at the Dow, that was down about 55 basis points. It too has really struggled. Basically today closing right at its 10-day exponential moving average and well above its 10-day. The Dow actually looks a little bit stronger than the NASDAQ and the S&P at this point. You could probably also make an argument that we were able to close within the trend line that had looked like it may have been broken, but it obviously we held on to it. This looks stronger than the other two, but we need to see the Dow really break above 45.6 before we can get more positive on it. Anyway, we'll see you again next week. Bye.